Hey traders, checking into the stock market today. So it looks like a fear climax, bottom, capitulation. We got the FOMC on Wednesday. Is this the bottom? Are bulls about to take over? Let's look at the charts and see if they scored a win. So looking at the S&P 500, we've got a lot of volume climaxes and bullish reversal candles, and a big difference from the last few days is we didn't sell off into the close. We ran up into the close. So that's obviously different than what we've been looking at recently. At the low of the day today, it felt like the market was going to completely fall apart. And if this is your first time seeing this kind of fear, this is definitely how it often plays out. Whether it's the crypto space or the broader market, you see maximum fear, the sky is falling, and then a complete V-shaped bounce, short-term FOMO from the bulls, and capitulation high volume candles. So again, go back and look, and on the way up, every little pullback here, the higher low is marked by a significant amount of volume. So what do we need from here? We need an hourly trend change still. This move came straight off the low. We're still in an hourly downtrend on the futures chart. The overnight high is 44.37, we'll call it. And here we are under that level. So we need an hourly trend change is step number one. We'll then need to zoom out. We'll then scout a 4-hour trend change from there. If we're looking at it on SPY, we have, again, a high volume bullish reversal candle, and the bulls must prove it. If we open higher tomorrow with a gap up open, aggressive bears, bulls are going to be looking to take some profit, and aggressive bears are going to be looking for entries for hourly consolidation, knowing we haven't changed the hourly trend yet. If we open lower, bulls are going to be looking for the hourly higher lows, playing off the low of today, and then looking for the confirmed hourly trend change for daily bounce follow through. It's important to distinguish once we change hourly trends. And again, the vast majority of individual names and sectors, what I'm saying right now applies to everybody, not everybody, but the vast majority. And that is because correlations significantly pick up in a fear market environment, like the one we have seen in the past week plus of trading. So hourly trend change needed. If we confirm hourly trend changes tomorrow, we zoom out and we know the result of this bounce, more likely than not, is going to be a daily lower high. We've got the FOMC on Wednesday. So if it's a bearish reaction to the FOMC, that could stop the daily bounce very quickly and set a lower high very quickly. If it's a bullish reaction to the FOMC, we could see a significant enough move to create the space for an eventual daily trend change attempt. One time frame at a time. Hourly has to change trends tomorrow for all individual names. If we get it, we zoom out and scout a daily lower high, watching the size of the bounce, watching our fib retracements. How significant of a bounce is it? Are we going 50% plus, which then creates space for the equilibrium? Are we going to top out and see some bear flags form? But certainly looking bullish for some continuation. And I personally played the biotech sector XPI through LABU today, and it was a really good day. I'll go over that trade and how I played it at the end here, or when we get to XPI. So QQQ, look at this dollar volume and share count volume. Shares, 197 million. Look back in history. This is one of the highest volume days ever. And if it's not, it's one of the highest dollar volume days ever, because the times the shares were higher, the price was 90% lower. So I'm going to go out on a limb, and this is an assumption, but I believe that this was the highest dollar volume ever traded in QQQ, which is very significant. And again, if you look at the COVID lows, what did I just say, 197 million? COVID lows are 150 million. So we had 30% more shares traded, but not only that, the highest volume day there was happening at around $200, and here we are at 350. So the dollar volume was more like something like 75% more than the highest daily volume during the COVID dump. It's a very statement kind of day as far as the amount of volume that we just saw. And we need the hourly trend change tomorrow if the bulls are going to prove follow through. Higher low and higher high. If we get it, we zoom out to the daily, we scout a daily lower high to be the result of that bounce, and then we see the FOMC reaction, and we gauge whether or not the bulls are going to be able to confirm the daily trend change from there. Bears are going to be waiting for a daily lower high, and potentially myself as well. But one step at a time, one time frame at a time, and right now I'm in bull mindset because, as you know, I love oversold bounces. It's one of my edges, and I was waiting for today for the last 3 days. SMH, significant bounce as well. Look at the monthly time frame. This sector is still one of our lead bulls. EMA 12, monthly uptrend. There are no major red flags on this long-term chart. If we continue to see major red flags in the broader market, we're going to look to lose this monthly EMA 12. But again, The big question that we have for the next few weeks, and the FOMC is going to be a huge shift in the probabilities to the answer of this question, is this our bottom for the foreseeable near-term future? It's possible with that volume. If we have a bullish reaction to FOMC, probabilities will increase that it is. If we can't change the hourly trend, probabilities will significantly decrease that it is. But SMH needs the hourly trend change as well. And if we get it, we zoom out, scout the daily lower high, anything under 314.82, a lot of space for it to form. Tesla broke key support, 886. Look at the 2-week time frame. That confirms a downtrend. But earnings are going to dictate things here. And the FOMC, but really earnings. If it's a bearish reaction to earnings, this 2-week downtrend is going to follow through. If it's a bullish reaction to earnings, it'll be a confirmed downtrend with zero follow through, which will keep monthly EMA 12 as support and keep a strong, longer term monthly uptrend. So pretty key for earnings on Wednesday. In the short term, if there weren't earnings in play, we would need the hourly trend change. We would then zoom out and scout a daily lower high, anything under 11, make that 1071. Healthcare, big long lower wick, weekly uptrend lost. Monthly time frame, still holding the higher low, 124.02, held that level by less than $1, and the EMA 12 is in play. Hourly trend change back to the bulls will be needed. Nice end of the day move. We were a weaker bouncing sector until that last hour there where we played a bit of catch up, but the hourly trend change will still be needed. And then we scout the daily lower high. Again, bulls have to prove it one time frame at a time. If you prove the hourly, you still got to prove the daily eventually as well, because bears are waiting for those daily lower highs. Financial sector, big lower wick, big bounce, hourly trend change needed. If we get it tomorrow, we zoom out, tons of space for a daily lower high to be the result of that bounce. Again, we're going to be measuring our fibs. How big is the bounce? Is it a 382 retracement bounce that favors a potential bear flag? Is it a 50% retracement bounce that favors the daily high or low? If we didn't have the FOMC in play, I'd be a lot more confident as far as daily oversold bounce follow through. But again, that FOMC reaction could just be a brick wall on this bounce attempt. So it's a bit of a wild card, of course. IWM, one of the better bouncers out there. Sector-wise, our best bouncers were the biotech sector, IWM, the semiconductors, and QQQ. And all those names bounced something like 6 to 8%, and SPY bounced something like 4.5 to 5%. So just a bit stronger. IWM, as we know, led the way down. It has the most beat up names. The hourly RSI on these names, on the growth names, are absolutely crushed. Names like ARC or SQQ, or SQ, I should say. So there's ARC. Again, look at the volume. Just absolute highest volume ever. And volume climaxes often mark tops and bottoms, but proving to be done. Hourly trend change needed. Then we zoom out and scout the daily lower high. If we don't change the daily trend, we know this bounce does not have much follow through. So IWM, hourly trend change needed. Then we scout the daily lower high. EMA 12 has rejected a couple bounce attempts on a lot of individual names and sectors recently. We can use that as a short-term visual guide as well. So XBI, big time bounce. So I've been waiting for this trade for 3 days. I've been trading LABU, establishing a core position, knowing I want to play XBI for the weekly and daily oversold bounces. And I know the broader market is at extreme RSI levels, so I know the bounce is coming in the near term. But I can't just scale in because our hourly RSI and daily RSI are oversold, because that exposes myself to a lot of pain if we get an anomaly. And I made a tweet today where today was an anomaly kind of day. And that's just because of how extreme things got. If you were watching the short-term timeframes, normally it's fast and hard trading and a lot of volatility. But the short-term timeframes today on SPY and QQQ, it was a slow bleed for a good part because these little bounces were cooling off RSI levels. And look at the 5-minute RSI. I mean, you look at the daily RSI for QQQ. At the lows today, that daily RSI was down near the teens. It might have even hit the teens. The 4-hour RSI was in the low teens. The hourly RSI was in the low teens, mid-teens. So when you're that beat up on the longer term time frames, the shorter term RSIs, I mean, look at how low we got. We got to 27. If you show me this 5-minute time frame in itself, I would not say there was any kind of weakness in the broader market. Yeah, we're pulling back, but 5-minute RSI is hardly getting oversold. We're not dumping hard. It's all the longer term time frames dumping hard. The shorter term time frames were stair stepping down. And normally a bounce like that, you see a big flush down and then a V-shaped bounce as far as a capitulation low. And this was just a slow bleed. And that kept me real patient. And I'm grateful for that to a certain degree because it helped me get really good positions in LABU for this bounce. And it ended up being a falling wedge. And we knew to be watching, as I saw the slow grind down during the live stream, I was able to say, it's not going to be a climax kind of flush, in my opinion. It's going to be a falling wedge kind of flush because it's a slow bleed down, and it's really just going to be bear exhaustion. When bears have no more momentum in their favor, that's when the scales will tilt between supply and demand. So again, we didn't flush in V-shape. It was just a slow bleed down, and then bears kind of just gave up. They had nothing left in the tank. They've been running so hard. Again, I just imagine a bear sprinting, and the bear's been sprinting for a week, and it is completely out of breath. And as soon as it was out of breath, it can't put up any kind of fight, and the bulls completely took over from that point forward into the end of the day. So for me, the slow bleed on the shorter term time frames made it an anomaly kind of day. And I knew that I wanted to be a bit aggressive on this anomaly kind of day because it was an oversold bounce play, which again fits my edge as a trader. So I was watching QQQ the whole time. I was watching that falling wedge type setup, and I made an initial entry with the gap down open on XBI. I entered a core position on LABU first thing. Didn't care about, being patient, just initial core entry. Because again, I know I am scouting for this daily bounce. I want to swing position. So I made an initial entry knowing that I would happily add if we continue to drop down. I had multiple trenches, not a trench, a tranche, multiple orders set to go. I'll enter here, I'll enter another leg down, but my aggressiveness matches the bears. If you didn't watch the crypto video that I put out over the weekend, I go in depth into my trading style of oversold bounces. Granted, I'm talking about the crypto space, but it's all applicable to the broader market. And when the bears go extremely aggressive, that's when I get aggressive. So because the short-term time frames were not aggressive bears, they were just puttering around lower, I was being very patient. And you can see QQQ on the 5-minute time frame right before the low. That's when it started getting a little bit more aggressive. The 5-minute time frame, the bears are not being aggressive right here. Here's where they start being aggressive. So, okay, I'll match you. I'll start going aggressive as well, because usually when we're in extreme time frames, the aggressive bottom leads to the V-shaped bounce. That's why you get volume climaxes. You have the maximum amount of bears. You have bears starting to cover and take profit, and then you have bulls buying the dip. So there's this confluence of volume of both directions happening at the same time to go V-shape. And so we get that volume climax. So I entered, let's just go through it real quick. LABU right out of the gate. So 1-minute time frame, I am making an entry. And that was at 1669. So, all right, I've got a starter position, and now I'm going to be patient and let things play out a little bit. Don't want to be too aggressive, got to observe. Big bounce, right up to the high, I'm very quickly green. All right, I'm comfortable. I'm not going to add anything because bulls aren't proving anything. I would need a 5-minute trend change at a bare minimum. We didn't see a 5-minute trend change in our major sectors. 5-minute lower highs and lower lows on QQQ. Again, this whole time I'm watching QQQ, IWM, XBI. That's all I'm watching as I'm trading here, because I know that those are the 3 main factors for me trading LABU. So I got my first entry. I'm comfortable green. All right, back to red. Again, I don't care. I actually, at one point on the live stream, I said, I hope we get another significant leg down, because that's the only way that I'm going to go aggressive with a large position size for this to be a significant trade. And so we did get another leg down. We had a little double bottom here at first. And at that point in time, we double bottomed and other sectors hit new lows. So that made me a little bit more confident. Okay, we got a little bit of bullish correlation. Still not enough to make any entries. And at that point, just patiently waited. And right now, this is me saying, okay, things are getting extreme here. It's an anomaly kind of day, but 5-minute RSI. I already know, I don't even have to look. I know the longer term time frames are beat up. I go aggressive when it's daily, 12-hour, 4-hour, hourly, and then 15-minute, 5-minute start getting extreme as well. Because if the 15-minute and 5-minute have extreme RSI levels, I know at the very least, I'll get a short-term bounce that will allow me to position around. And so on this drop, the 5-minute RSI, that's only the 1 minute, the 5-minute RSI got down to Not that beat up, but the 15-minute RSI was. 15-minute, not months, 15-minute. 15-minute RSI was down in the teens. So 14, almost down at single digits. So okay, that's when I'm going to start adding to my position. And I don't place a stop loss on my positions until I have all that I want. And then I say, okay, I will place a stop based on the dollar risk that I'm willing to take on this trade. And because I knew it was an anomaly kind of day, I'm taking on more risk because I'm going to have more reward if this trade plays out. So you have to have more risk if you're looking for more reward because it's larger position sizes and it's larger moves. So I had that initial entry. I then sold some on one of those bounces. So, sold half, not significantly higher, 20 cents, rebought it back fairly quickly. I just dropped my average a little bit, but again, it's still just my core position. And then I started adding more. So I entered more at 15.43, and then I tripled down at 15.10, and I got real good fill. I missed the bottom by 4 pennies. So entered on this drop, sold a little bit into this bounce because this was a very significant bounce. At that point in time, my 15.10 position, if I sell that, I can take $1 off my initial 16.69 position. So again, I've got one at 16.69, one at 15.40, whatever, 44, and one at 15.10. So my goal was on this bounce, I'm going to sell one of those 3 positions. And at this point, I'm in a very large position. And at this point, I'm down, almost a 4-day maker. But again, I'm going bigger, so my risk is going to be bigger. And so I sold on this 5-minute bounce, knowing we haven't changed the trend. Yes, it's a nice bounce. I'm seeing some pressure put on some short-term shorts, but not a 5-minute trend change. So I'm going to sell some into that bounce. Because again, the reason that I was going aggressive was anticipating, well, at least we'll get a 5 and 15-minute bounce here in the near term. And if that doesn't play out into the hourly bounce, it'll still allow me to maneuver. So if I've got my 15.10, if I can just sell my 15.10 at 15.44, that'll be essentially my 15.44 position, break even, get that out of there. I got my 16.69 and my 15.10. And that would put my break even at, let's just call it 16.80, 16.80 and 15. You're going to be looking at 15.90. So now I've got 2 positions. I sold 1/3, so I got my ammo back, and my average is 15.90. We just bounced to 16.21. I'm still very comfortable. My break even is right about there. We drop back down. If I wanted to be mondo aggressive, I would have added that 3rd position back on that double bottom. And instead I added a little bit back. I added a half of that position back and then sold it again fairly quickly. Again, the more ammo I've used up as far as positions I'm willing to take on the trade, the quicker I'm going to scale out of some of that position. So I get my ammo back and I get my maneuverability back, because if I'm in a full position, I can't do anything. My hands are tied and I'm at the mercy of the market. But if I sell a bit, I've got cash. Okay, next leg down, I can do it again. If we get extreme, add a bit, sell a little bit onto the bounce. That just keeps lowering my cost basis. So by the time I scaled out of everything that I wanted to from my very large position and say, okay, well now I'm down to my core swing position, my average was down at something like 15.55. So right down near the lows. So I currently have a swing position with an average of 15.55 that I'm holding into tomorrow. And it's a larger swing position than I normally take. And again, I risked, I was down a 4-day maker at the low of the day, but here at the end of the day, I'm now up a 13-day maker or 14-day maker. And I'm not locking that in because I haven't sold. And if we open lower tomorrow, if things surprise me and it doesn't go according to plan, I'm not locking that in as far as I made this much today. I am up this much, but I know that can certainly fluctuate. So I knew that I was going to be looking for an easy 20% bounce on LABU. And at this point, we're pushing towards a 30% bounce. And that was just noting the extreme nature of the ETF and the broader market as a whole. So I would love a bit more follow through. If we gap up tomorrow, I will take more of my swing position off. If we open lower, I'll give the bulls a chance to confirm an hourly trend change. But it was a good day, playing the bounce. And again, I can't stress enough the opportunity in both directions in this sector with LABU and LABD. And I know ChartGuys members, we probably have a 300% increase in the amount of people trading XBI over the last couple of weeks. Once everybody realized, oh yeah, that's true. There is a massive amount of opportunity in both directions. So again, this is the daily candle for XBI, and LABU on that candle has a 28% bounce right now. And it doesn't even look like the bounce has even gotten started. And maybe that's the case, which is why I want to have some swing position for the potential that this is a big win. We'll see. Hourly trend change if needed, just like everybody else. And then we zoom out and we scout the daily low or high, just like most other names. Is this going to be enough for a weekly bounce? Maybe. Take it one time frame at a time. MSOS, so looking at the MJ sector, again, some of the most beat up names. Everybody's bouncing today, but we're going to not lose sight of the bigger picture. Anything under 25, 23 is just a lower high. We can bounce another 10% tomorrow and still be in the daily downtrend. So yes, the daily bounce is underway on all these really beat up names, but so much more follow through is needed if we're going to be looking at this as far as any kind of significant momentum shift taking place. Just click the wrong button. So it's a start. We need the hourly trend change, and then we need a daily trend change. If this bounce, if this volume does not result in daily trend changes, it's just going to be a lower high, and we're going to be looking back at continued possible weakness. If the broader market breaks the current lows of today sometime within the next 2 weeks, I'll be very surprised. It will likely be either Russia invades Ukraine or a massive bear reaction to whatever the FOMC has to say. But I will be very surprised if this does not set the low for the week and beyond. We've got tech earnings. Next week is the main event as far as all of the major big names having those earnings coming. So there's a lot of fundamentals still in play here. But the technical setup is there for the bulls to try and follow through from this oversold bounce. And again, if these lows break this week, for me, it's definitely an uh-oh for the market. MARA, crypto-related name, so Bitcoin was bouncing with the broader market. Again, you look at this daily candle and say, okay, well, we're hardly bouncing. We're still in a clear daily downtrend, but this is a massive 17% candle from the low of today. And we set that low, and Bitcoin showed us some relative strength. Bitcoin did not break its low of the morning while the broader market kept dropping down. That showed us a bullish correlation for the first time in a long time. So here we have MARA double bottom at the low of the day, and then the bulls just took off. And it was a falling wedge here as well, where again, the bear breaks just start to lack some follow through, and a really nice one there. It's like being a kid in a candy store today. I wanted to play that bounce, but certainly don't have any regrets of just being single track focused completely on XBI. But MARA had a real good one as well. Gold still looks real good. Daily uptrend, higher low trying to be set at 1828. We know 1877 is a key longer term level. And as long as the bulls keep the daily higher lows, they're confident. If we lose the daily higher lows without breaking 1877, that's going to be your first red flag. We know we're going to react to the FOMC on Wednesday, 2 p.m. And of course, the bulls hoping that we just follow through here. The longer term setup is there. And again, I personally still don't have an interest in the metals. That does not mean you should not have an interest in the metals. Just for me and my trading style, the gains that I made trading XBI today would make up for what a swing position in gold would give me if we break out to 1900. So it's just not significant enough volatility when you've got names that are going 28% in one day, and the leveraged ETFs for the precious metals are not very liquid. And, the leveraged ETFs to match what LABU did in one day, I mean, this entire move is not even close to doing it. We would need, even here, this move from here to here on a 3 times leveraged ETF still doesn't match what LABU did today. But the metals are bullish. And the burden is on the bears to ruin this bullish setup. Silver pulled back very significantly right off daily EMA 12. Hourly bounce underway. Need an hourly trend change. Then we zoom out and scout the 4-hour lower high. And again, have to maintain daily higher lows and break 2541 for a longer term resistance break. Keep an eye on the miners to be laggards. So the miners have been weighed down by the stock market weakness. They played one big laggard day last week, and they were very powerful. And the 3 times leveraged ETFs are definitely worthwhile on the miners. And then we dropped down today. So look at today. The miners hit the low of January 18th. Look at the metals. Where's the low of January 18th? Gold didn't come anywhere near it. How about silver? We dropped back more. Did we come anywhere near it? No. Nowhere near the low of January 18th, but here are the miners testing that low. So if the metals keep daily uptrends and the broader market continues a daily oversold bounce, I'm looking for the miners to play catch up and to be a little bit of a laggard. We need the hourly trend change, just like so many other individual names, but keep an eye out for these miners to try and catch up to where the metals are, which would be notably higher. And oil holding on, 4-hour downtrend confirmed, but no follow through, which means zoom out and look for a potential bull flag. So the daily is a potential bull flag at this point. Anything under 86.09 is just a 4-hour lower high, but it's a bear break. Confirmed 4-hour downtrend with a lack of follow through. Checking the energy sector out of curiosity. Bulls buying that dip. Again, bigger picture. Energy bulls just fine as well. Exciting day. And a lot of proving has to be done for the bulls. Start with the hourly tomorrow. Then we look for the daily. We watch the FOMC reaction. Establish those game plans. Have those stop levels. Bulls are going to be looking. Bulls that did not enter today are definitely going to be looking for hourly higher low entries. And if we break lows of today for any individual name, any individual sector, definitely a big red flag for bulls. This needs to mark the low for a foreseeable amount of time. Wrong word, but a significant short-term amount of time. At least a couple weeks. We got to mark that low and see bounce follow through with this kind of volume. All right. That's that. Check out that crypto video for more in-depth insight into how I play bounces. And we will see you soon. Do good things. Appreciate you watching. So for adventure time now, got back from the road trip to Florida. Got a call from my buddy as I was looking for my next move. And he said, hey, I got a friend of a coworker, of a sister friend who needs someone to come house sit a couple dogs on the beach in Costa Rica in Pavones. And I said, okay, let's do that. So that was a great connection to have, and ended up going for 6 weeks to this house sitting spot, and it was perfection. And the change of pace that going to Costa Rica brought was just, it couldn't have been more perfect in terms of the lifestyle, just slower paced. Pretty much all you got to think about every day is, what do I want to eat today? And that's about it. When am I going to get in the ocean? What time is it? Where's the tide at? And Pavones has the second longest left to right breaking wave in the world. So it's a surfer's haven. And there's also a bunch of yoga retreats. So there's a bunch of yogis there. And the most important part is it's off the beaten path. It's all bumpy dirt roads and about a 6-hour bus ride if you want to get there from a city with an airport. So that keeps tourists away, and it keeps it really awesome and low key. Now, as we were leaving a few years ago, they were just building some kind of resort, something, and it felt like things were about to change. Hopefully that didn't happen, but I haven't gone back since then. So we'll talk about some stories and hanging out with the dogs. We'll talk with the dogs in a later video, but it was the kind of thing where we went for 2 weeks and stayed in a hostel to get a feel for the area and to meet people. We brought our jam instruments, and that was the best part about the hostel, is there were always people around. It was a big community kitchen. This beach is, 5-minute walk from anywhere that you stay in Pavones, and there are waves every single day. It just depends on the tide. Twice a day, there will be awesome waves, and I love body surfing. It's one of my favorite things to do. So having that available, I would just trade in the morning and then get into the ocean and walk the dogs. And that was the day. And that was the first time that I experienced a euphoria money growing on trees market. That was 2013, 2014. And the US penny stocks, they all ran 500 to 1,000% in the span of about 2 months, even less than that. So it was just massive euphoria, like we've seen with crypto, like we've seen with Canadian MJ. So again, these cycles just keep repeating themselves, but this was happening in the Canadian or in the penny stock MJ world. And we had a chat room where we just collected some like-minded individuals and chatted with each other and talked about plays. And that was really the first step towards the chart guys in terms of running a chat room and organizing things and staying productive and seeing what a team could really do working together. But being able to do that here was pretty much heaven on earth and just absolute perfection. There's a little skate park that the locals had built. So this is the hostel, and it was just a jungle. The plant and animal species there are insane. Life is everywhere. And this place tucked away in the jungle, again, just late night jams with other travelers that were coming through. And I can remember one night it was just pouring, and this guy was freestyling, and I was playing the drum, and my buddy was playing the keyboard. and it was just a good old time. There was a little kid who lived there. We brought these balls where you hit them. They light up in all different colors, and at night we would chuck balls at each other. Lizards were everywhere. There's Dan in a hammock. So we're going to go to the castle on the beach, which is I think what they called it, and the dogs, Baloo and Cowboy, for some more stories with them and some more Pavonas. Go to Pavonas. Go to Costa Rica. I got to go back. There's so many places to go, but when you get to a good one, you want to go back. But man, that was perfection. Internet wasn't bad. It would cut out at times, and it did lose me money. One morning I can remember the internet cut out and I wasn't able to sell. But it was the gap up open play. That's where I learned it. In that run, you buy into strength at the end of the day, you're going to gap up open the next day. And we didn't have pre-market trading in the penny stock world, so it was just this guarantee. And just lock it in, and ended up coming home with maybe twice as much money as I left with before I got there. So, good times. See you tomorrow.